for me, this is just an inevitable thing that the biggest brand in crypto was going to make their own chain. The industry doesn't make sense if you can't build an app and keep the value. Like,
Yeah.
right.
I think they're going to try and position this as like the Solana on ETH, right? Where most of the liquidity sits for meme coins, for assets, like a bunch of the probably OG Uni LPs will move over. It's definitely an app chain.
Nothing said on the Hivemind is a recommendation to buy or sell securities or tokens. This podcast is strictly for informational purposes only, and any views expressed by anyone on the show are solely our own opinions, not financial advice.
All right. Hi, everyone, and welcome to another episode of the Hivemind podcast. Today with us, we have the usual gang, myself, Jose Marie Macedo, Jan Lieberman, Duncan, aka Flood Capital, and Ceteris. So news just dropped, UniChain, probably the hottest thing on the docket for us to talk about. For a bit of background, Uniswap just announced UniChain. It was built in partnership with Flashbots and the Optimism team. It features these flash blocks, which are like 250 millisecond partial blocks, based on that they've taken some stuff from Solana architecture, and it's also going to have like the ability for apps to have custom logic, which allows them to internalize MEV, and a bunch of other stuff. So pretty big news. Kind of goes into the thesis that I've been harping on for a while, that every single successful app will eventually have its own execution environment. And I think it's basically now all of them, right? Like, I mean, Compound never launched their chain, but pretty much every successful app in crypto has moved to this model. And Uniswap's just the latest one to do that. Curious, yeah. What are you guys' takes on this?
Yeah. So first of all, I think there's a lot of nuance in this, because UniChain is not making the Uniswap AMM an app chain, right? This is like Uniswap taking their brand and wanting to become, and this is something that like I've kind of talked about for a while, how like I think the end game of Uniswap is just to be this complete like consumer finance platform, right? And that's why like they've done the wallet, and now they're doing this chain too, and they can kind of just own the entire part of the stack. Like it's not like UniChain is just going to be their AMM, right? And that's it. It's like they're using Reth. It's like EVM chain. They're going to get a bunch of applications built on top of them. This is just them, I think, like using their brand to kind of just own the entire stack, right? And I don't think every application can just do this. You have to be extremely successful like Uniswap. And like I do think this chain will probably be pretty successful. I think it's my first take is like it's bearish for a lot of the other L2s. Like Base already took like most of the activity on L2s. I feel like this one is going to do the same thing and just take more of that, especially because it's going to be way more performant than the other ones, and that seems to be like what people kind of care about, right? So yeah, what's interesting though is like obviously there was a lot of front running in this. Efficient market hypothesis vindicated, because like it didn't really move from the announcement, but it was up like 10% or so over the last day. But if this came out, I feel like if this announcement came out in 2021 or something, Uni token would be flying, right? And so it
Yeah.
seems like people don't. I don't know if they don't care. Like maybe they got to like read through it more. But yeah.
They mentioned they're passing through sequencer revenue to the Uni token, so I don't know if AMM fees will be passed on, right? So I don't think they're using this as a kind of Trojan horse to turn on a fee switch, but they're creating a new source of fees, but they're passing those fees along to the Uni token, which is finally some form of value accrual there.
Yeah, they have this native interoperability solution, right? It's like leveraging the super chain stack but you basically get sub 1 block ERC20 transfers, and then they're trying to push this initiative called ERC 7683, which is it's basically trying to extend that superchain interoperability to all other chains. And I'm guessing they're going to try and funnel a lot of users to just keep their assets here and then do all their swaps through Uniswap X, right? Where they can just get you the best liquidity wherever it is, and then like funnel the asset back here. Pretty interested to see how that plays out actually.
Outside of other L2s, I was joking around. One of the other big losers is Jared. What share of his MEV comes from Uniswap? It's got to be.
Yeah, but do you think this actually impacts Uniswap like trading activity on L1?
I mean, I guess how much liquidity do you think moves over?
It seems like the applications will want to move over, right? Because they have this ability to internalize some of the MEV. And so it'll probably be the place that applications themselves want to encourage people to trade, which in turn will probably move a lot of the volume and liquidity over there, or a lot of the liquidity and volume over there.
Applications launching on UniChain have the ability to internalize their MEV.
That's what I understood. Obviously, this has just come out half like an hour ago, so I
So
think none of us
go
have
against
time to
the
read through the white paper.
doesn't that kind of go against the app chain thesis then? If the application on a chain can just internalize the MEV, then you don't need to create your own chain.
Well, it's through this like stack they've created with the trusted execution environments and stuff, where you can basically have applications put in logic that enforces certain ordering that allows them to capture some of the MEV. I just read it on the blog post announcement. I'm like 25% of the way through the white paper. So, but I think that's the idea, is that you can enforce any kind of sequencing through the trusted execution environment.
Yeah, so that to me is like against the app chain hypothesis. If a lot of the reason why people think you need app chains is because you can internalize all this, and if you can just get like app specific sequencing as a contract, then you don't need to create an app chain, right? So for me, this is just an inevitable thing that the biggest brand in crypto was going to make their own chain, right? But obviously, other applications are going to launch on this chain now, and if they can internalize their own MEV, then it's not like those applications will need to make their own chain, right? And so that's why I don't see this as an app chain, because it's just Uniswap brand creating a new performant chain for people to use, right? It's just like it's like competing with Mega ETH, I would probably say, if I had to pick like the main L2, right?
Cedrus, you got an interesting comment on one of your tweets. I think this guy listens to our shows pretty frequently. From Ate My Bags. Cedrus, am I taking crazy pills, or is ETH becoming the Cosmos hub? Like with kind of like announcements like this, do you feel like it's moving more towards that?
I don't know, because ETH1 still is like general purpose contracts, right? It still has like all the restaking stuff. I mean, Uniswap stakers are still going to be they're actually staking on L1. I mean, there's some of that though, for sure, but it's kind of just an inevitability, I guess. The Cosmos Hub literally does nothing, so I don't think that the comparison is totally fair. And ETH actually like cemented itself as, I mean, it's got like 300 bill market cap or something, right? And it's like
And all the roll of settle to ETH like that. That doesn't happen. On Atom Secure is like two chains, right? As far as
I get the analogy of I get it like a little bit. It's not completely accurate though. I think this is just like neutral for ETH though. Like, it's unless you think, I mean, you can say it's because I don't think Uniswap on L1 is really going to lose too much activity, because it kind of is just like base infrastructure on Ethereum L1, right? It just facilitates, like a spot AMM has to be on a general purpose chain, right? That's why, like, I think calling this like an app chain is not really correct because it's not an app chain. It's just Uniswap is creating this performant chain with their brand, right?
That is an app chain though. That's like and like they couldn't do this anywhere else, right? Because this module that they've written, they'd have to get integrated by whatever chain they wanted to deploy on. In addition to the other stuff that they've put into the chain that we don't even know about. Like the I mean, one of the points of app chains is sovereignty, right? You can implement whatever changes you want to the execution environment, to the transaction ordering, without having to go through an EIP or convince, the optimism team or whatever to implement it. And I assume, I mean, yeah, I don't know where this is going to go, how they're going to like attract liquidity to trade here instead. But yeah, I agree. Mega ETH is like the biggest competitor, although all other L2s are, I think, too. Base chain, probably like Athena chain too, to some extent. But I think they're going to try and position this as like the Solana on ETH, right? Where most of the liquidity sits for meme coins, for assets. Like a bunch of the probably OG Uni LPs will move over. There's probably going to be some incentives to do so as well. Not sure if the MEV will be enough or if they'll use actual incentives. But yeah,
Yeah,
I don't
like
know.
I do.
I think it's definitely an app chain. Like
Okay, so we can call it. We can call it an app chain, whatever. What I think is really happening is like a successful app gets to create their own kind of like customized, specialized chain because they have this strong app that they can like integrate in. But then the chain itself is not necessarily an app chain. That's like what Athena is doing too, right? It's like they've got this like stable that is everywhere,
Yep.
and now they can use that product to just create their own chain. And I think you'll see the successful ones are able to do that where they have a successful app, but then when they move to their own chain, it's not like the chain is just their own app. It's using that as like the pillar, but then you're bringing in all these other applications as well, right? Um, and I think, yeah, you could kind of see this being like maybe it shifts away from just having these purely general purpose L2s in it, and it's like you create these chains around, custom whatever, right?
Yeah, that's always been my like our modular thesis, I guess, of why we think everything ends up as an app chain and why there will be thousands of them. And I do think it also, I mean, this definitely doesn't validate that there will be thousands of them because, as you said, you have to be a successful application to really pull this off. But it does, I feel like, affect the L1, the monolith thesis if you just end up being a test net for successful apps, basically, because as soon as you succeed, you migrate off to your own chain to capture the MEV and whatever else, users and stuff like this. Yeah, I don't know. This is why I mean, Solana has its own modular stack that's developing now and stuff. But yeah, this is kind of where I think most successful apps will end up, honestly, and why I'm so bullish on stuff like Initia that's trying to build with this in mind from the get go. And Superchain. I mean, I think Superchain is doing a really good job too. Probably the
It
leaders
seems to
in
be, yeah.
this.
So it's interesting, like op versus arb. Like Arbitrum has way more activity than Optimism, right? Optimism's kind of like ghost town now, but Optimism seems to be getting all of these big wins on like the BD side, right? And it's like, what is more? I mean, what token is more? Like the op token has nothing to do with this UniChain, right? And the op token has really
Yeah.
like nothing to do with Base. Whereas, so I don't know. It's like an interesting to see how like the op and the arb token will diverge over time. If Arbitrum, they have these orbit chains, sure, but the most of the activity within Arbitrum Eco is on Arbitrum, and then like I guess Hyperliquid, right? But for Optimism, it's like it's really these other chains now, these other chains that are going to start like taking
Yeah.
over all the activity. And so, what does op like mean? What is op? What's the point of that token, right?
Yeah, the bear case is that it just becomes like, the Cosmos SDK has been hugely successful, but Atom hasn't really benefited from that. I think the OP stack could be somewhat similar, where you have Base and UniChain and a bunch of others that end up using your stack, but how do you benefit from that? I do think owning this interoperability standard, basically having like an inbuilt bridge and then offering these like value add services at the super chain level will end up being pretty valuable. because you will they're just best positioned to coordinate across all the projects using their stack. But it's definitely like a lot of execution risk in doing that. But I do think that will be like pretty valuable.
I don't agree though that with the thesis that like applications will keep all the MEV in the long run, because there's a lot of benefits to launching on a shared layer. And like again, the UniChain is kind of goes in with that. Applications launching on Uni will take some of the MEV. UniChain will take some of it. There's kind of like this bargaining. Like if you launch on a general purpose L1, there's kind of like this bargaining you do with the validators, because there's a lot of benefit to sharing state with other applications. And so right now, validators are taking like all the MEV and stuff.
What are the benefits? Because like when we did the analysis on, we haven't redone it, but when we did it like 2 and a bit years ago, there was very little of the state that actually touched each other on both Solana and Ethereum.
Well, it's the users and the liquidity, basically.
Yeah.
Yeah, but that's more UX, right? Like theoretically, that could be solved with like chain abstraction or like UX abstraction.
Sure, like theoretically.
It's been theoretical for a few years. So I'm not like, but still, that there's nothing fundamental about
Did
that.
you guys see
Here
Synapse?
comes the show.
Do you guys see Synapse launching Cortex? Seems like it's solving exactly what you're referring to, Jose. It's been in the works for years.
We've heard.
Chain abstraction is one of these things where it's like, sure, yeah, everybody knows we need it as like a solution and everything, but it's like unclear how good you can actually make that and like how long that's going to take.
I just love how all these conversations come back, and then the answer is the Synapse chain, now called Cortex. If it launches, if it can execute on the vision, that's what I've been invested in for 2 years.
Wasn't it gonna look? Yeah. Anyway, I'm not gonna give you more rope on this show. So segue to this. Do we want to talk about like the applications versus infra? Ryan Watkins had a great post just sort of pointing out how applications are now like pretty strongly flippening infra in terms of revenue, but not so for valuations. And yeah, his conclusion was that like infra would probably still command higher valuations, but only a few L1s will be able to do that because they're basically competing for money. Yeah, I'm curious what you guys thought of the post and where you guys sit on this.
Yeah, I mean it's a sum of the parts thing, right? So it's not. I mean, you have some that are outpacing like less used chains, but you know, there's no one really competing directly with ETH and Sol. But if you do some of the parts on all of them, that makes sense. I guess like it seems pretty inevitable that more of the dollar spend of users will shift towards apps because, you know, to some extent you assume that they would move to a cheaper chain, right? If like every dollar of spend on an app was sending more towards the L1, then there's an opportunity for that activity to shift to a cheaper chain. There's, you know, realistically, it shouldn't be that prohibitively expensive to transact on chain relative to what you're spending on the app. I guess it really depends as well on if you're thinking about the type of app too, right? If it's an exchange, the fee is pretty fixed in the form of gas, but the amount you spend is based on volume, right? So if it's a lot of small transactions, you'll have the makeup will shift more towards the L1. And if it's a lot of large transactions, then the fee shift will go towards the app. So I think you kind of break it out by app and do some of the parts, but it seems inevitable that over time as scaling improves, the amount that's spent on the L1 or just the on-chain fees should decline, whereas the app fees are pretty standard.
I think there's two main. So the easiest example, I guess, look at like a money market. So money market has like its internal fees, which is just like interest spread, basically net interest margin that they make. And that's like something application just accrues, right? But then there's like where the real value is, and that's in the liquidations. And those are like execution and sequencing fees, right? And those go to validators now. And so, yeah, this just goes back to my earlier point. Like as a money market, you want to be on a chain with a lot of liquidity in it. And so you benefit from being on a shared state layer with a bunch of activity. And so right now, yes, validators of the L1 are taking all that MEV. They'll probably need to give some back to the money market, right? Like just competitively. But again, I don't think like money markets, a money market on like a shared L1 will just take all that MEV because validators still need to get paid at the end of the day, right? So I think people like to take extreme views on like the two sides of this. And I think that, yes, I think that both like apps will, yes, start to accrue a higher portion of like MEV and like execution fees in the long run. But if you just think that like overall activity on these L1s just grows even more, then right, it kind of like balances out.
But his point is that they're way overvalued if you're just looking at activity, right? Like
Oh, they probably always will be, right?
like L1s are
They're never valued on
his
that.
his comparison is like to which is one people have made many times before, just telecoms in the late 90s, right? There was no model to value them. People were extrapolating out like absurd numbers, and then like 20 years later they're like very uninteresting businesses that are they're valued on a multiple. And like L1s could be the same, right? This cycle where it's just like the only way to bet, it's like the best proxy to bet on crypto, and it's all like a relative value trade to Bitcoin. It's like, oh, these things might be money. That like I'm bullish on crypto, I'm gonna ape like ETH and Sol or whatever. But over time, as you get applications that win and like generate more fees, emerge as the clear winners, like a lot of that capital could shift away, and L1s could just become boring infra that's valued on a multiple. I agree they have some pricing power based on like the value of the state on there that you want to access, but I just think that's way less than like money markets is pretty much the only example I can think of. And even there, it's like the stuff that like there's not that many people using LP shares as collateral on money markets or anything like that anymore. It's just really like you just need it for liquidations, right? To be able to liquidate the collateral quickly, like within a block or whatever. I don't know that there's that much. Like, yeah, the composability thesis, I feel like just hasn't. I think if you think about why people want to launch on a monolith or on an L1, much more of it is the UX and user base versus benefits from composability compared to what we initially posited in like 2020, 2021.
Yeah, for
Okay.
sure. Everything you do is basically async. Like, you know,
Yeah,
you
exactly.
borrow something, you then swap it for something, you then deposit it into a pool. Like those are all async, right? But like the UX and liquidity is kind of like a big deal, and I don't think it's as easy to solve as people will kind of pitch and make it out to be. And if you can just keep scaling the L1 more and more, like how like Solana and some of these other high throughput chains are trying to do, I think these chains will continue to see more like relative activity share go up over the next like couple of years.
Yeah, I mean, I think like the value path, they're certainly pegged to BTC, as is everything in the space, right? And so that there's that element, and then there's also kind of front running their path to becoming eventual utilities, right? In a world where ETH is whatever its steady state value, let's just call it 10K, everything works out, like assuming everything goes well. I don't. I think it basically front runs the activity that's supposed to get there. Then the activity gets there. Then it operates more like a utility where it's slightly more volatile, but it's less of a front running the beginning of the internet type of play. So like that's why I think all of these valuations are mega stretched on these L1s, because the TAM that you're hoping to price, you're pricing in this optimistic large TAM in the future. And so that gets front run, and then eventually they kind of hit steady state, and then ideally it's the apps that start to do well. And yeah, I think that the proxy of utilities from back then is apt here, but it's tough to draw like exact parallels.
Yeah, it's just with telecoms, they didn't hit they front ran activity that didn't end up happening, right? And there was like a big crash. Like I think most of them haven't even hit their 2000 peaks. I'd have to go look at a chart, but I think Cisco and stuff like only recently, or maybe hasn't even hit their 2000 peaks like 20
That's
years
more. That's
later.
like
So
networking though. Telecoms is like your Verizon's, AT&T's more
yeah,
so, and they basically, because they sold off the tower businesses, and those became utilities as more capital efficient, basically for the towers to be standalone and for multiple telecoms to use the same tower versus each telecom owning their own tower. And yeah,
yeah. I mean, AT&T and Verizon are both below their 2000 price. Like,
yeah. I mean, I
yeah,
used
I
to
don't know.
cover
Obviously,
them
it doesn't take
back
into
in the
account
day.
dividends and stuff. Okay.
It's a very boring business. It's
Yeah.
just
Crazy.
because you hit pretty much like there's a decent amount of saturation, and growth is from you know children aging into adults being able to use phones, and immigration, right? Like that's your otherwise you're just, it's saturated, and you're just trying to steal market share from each other through promotions and all of that, and so they become just yield based products.
You know, you've saturated your revenue when you're waiting for children to age. Yeah.
I feel like on the application side, it's just I think the easiest point in the stack to extract value seems to be um, just like distribution to users, which probably comes as like a form of some sort of regulatory moat or just like having that distribution. So it's like
Banana gun?
base.
Is this a setup
No,
for
I'm not. I'm just saying like that just like the wallets, anything, right? Like even Base and Coinbase and like just funneling their users there, extracting fees there. Like what Uniswap's doing, they have a brand, they can bring their users to their chain. Anyone with users, that just seems like the maximum point of value to be extracted is you own the users and then you can take fees from them. Like a lot of the
Yeah.
infra pieces will just kind of compete each other on fees, and that'll get grinded in over time. And yeah, I think you have to hope the L1s do capture some sort of monetary premium, because it's really going to I think just the easiest point to extract fees is going to be at the user level.
Did you read Robbie's fat wall thesis?
Yeah, I think
yeah,
that's probably where we're going.
for a while though, and like it hasn't really played. Like we started investing against this thesis in like 2020, also thinking that not just wallets, but like the zappers of this world would, whoever's closest to the user, whoever the user like, because our theory is just people aren't going to be interacting directly with these protocols. There's going to be some abstraction layer, which might be a wallet, it might be a portfolio dashboard, it might be a trading terminal, and like they would own the user and be able to capture value, but it hasn't really played out. Like MetaMask is the only one that's really like managed to do that, I think.
Yeah, but I think that the idea that front ends are capturing value is true, at least if you just look at valuations. And we saw this with like Jupiter and Uniswap, who were both like the front ends of
Yeah,
their
they're both
respective
making a lot of
ecos.
money.
They're both like $7-10 billion valuations or something.
Like Uniswap market share barely dropped after they took the front end fee from 0 to 25 basis points, because they have just such like brand recognition and the users. I can pull up the data quickly, but it dropped like maybe from like 40% to like 30% or something. And a lot of those users are sticky.
Just how many people are using MetaMask and paying those fees is a testament that people aren't super fee sensitive.
I mean, even people that are smart enough to fish Eigen into giving them $6 million of tokens are using MetaMask to swap. Like that's just how many people just like value that convenience, right?
Especially when this stuff is so volatile and it's like, okay, like this stuff swings 10% a day, 5-10% a day. To make sure that you're getting like trustworthy, reliable execution for 25 bips is really like such a relatively low price to pay versus, your transaction failing or, using a website where is hacked or compromised or something and potentially losing your funds. I think that crypto is so trust oriented, and execution is so important because these assets are so volatile that whoever is going to be the biggest trusted brand offering the best execution and like safety and like cultivates that among their customers is going to be like very sticky in the marketplace.
There are some counterpoints, right? Like Tether is I guess a counterpoint, like in terms of someone that doesn't have. I mean, I guess they started by having one. Like they kind of grew it through Bitfinex initially when Bitfinex was dominant exchange. But nowadays they really are like a headless. There is no Tether front end or anything that's interacted through, and they just print money off being used by others. think stablecoins are an example where like you can actually pull that off. Although to grow, you do kind of need to like try and own the user, as you know, Frax and Maker and everyone found out, and having to build out their own DeFi primitives. But there are like a few examples, I'd
Well, they
say.
built the moat. That's liquidity. Yeah, liquidity is the moat. Like the most liquid trading pair on every major exchange is Tether.
Yeah, it's like if you don't have a network effect, you have to own the user, right? If you don't have like some kind of economy of scale, you sort of have to own the user.
There's also the comfort of not using USDC and the stigma that being associated with, you know, the thought that they can freeze your assets. So if you're international, you're just not you're gonna opt for Tether over USDC.
Yeah, I think like just front end and capturing the users is one moat. Like there's definitely other moats in the business, but as Jan said, like USDT has just grown to such an enormous size that they do own a lot of users in terms of like, you know, the trend, like the currency of um, these exchange pairs, and then also just like people hold Tether and use Tether in like commerce in a lot of places across the world. Like they've kind of built that up through just like being the only real competition or just having so much distribution. But it does kind of come back down to owning the user. They're just not really like an exchange front end business. They're more focused on that stable coin.
Yeah. So TLDR, we're bullish applications.
Oh, I do think like just on a final point, it's like the industry doesn't make sense if you can't build an app and keep the value. Like,
Yeah.
right? Like, what's the point? You know, and if people
I
aren't
guess
going to build
Thesis,
apps just so that they can like push the L1 token because they own big bags of it. Like that's not how you get new developers and stuff.
yeah, and this kind of leads us nicely to the next point on memes. So like memes have seen a resurgence. We saw SPX 6900, which Murad showed me at token 2049, and I didn't buy enough of, have like an absurd sort of whiff like run. And in general, like they've sort of been another meme season last week, and there's been a lot of takes on Twitter about this. Um, about how people saying memes are good because they're, you know, all the reasons, like, yeah, equalizing the playing field and all this.
I think the interesting one, and the one that like Jan disagrees with too, but I kind of agree with, and this was done by the guy at I forget what it's like Thea Research.
Felipe.
Yeah, like
Yeah, Felipe.
Felipe Montalegre or
So
something.
his
He's really good.
his
Also
point.
a banana gamble.
All right. So his point was that meme coins are good because they divert capital away from like pure narrative trades, right? And so you have these kind of trades a lot throughout crypto where it's like, oh, the L2 trade is on and people are just going to bid L2 tokens indiscriminately. And then, oh, there's like restaking trade or something. So maybe you'll get a bunch of like those tokens or like a DA trade, right? You get a bunch of DA tokens going. And these kind of have no semblance for, I guess, valuation or fundamentals. It's just kind of like chasing narratives. And so his point is that with people bidding meme coins, that capital that would chase narratives now is not there. And so real projects need to actually create like a useful product with like real fundamentals in order to get like liquid funds to buy them because you don't have that indiscriminate capital just chasing these narratives anymore.
But like, no, yeah. So I was gonna say, like, even in the crazy scenario where 1% of narrative, or one, like 99% of narratives are vaporware, and 1% are there's something useful to the space, that's still more productive than chasing memes because you're at least getting 1% something useful.
Shibarium L2. Have you heard of it?
But like, you know, typically with the narrative chases, you'll have like it's as you see with most stuff, right? It's something quality that'll kick things off, and then you'll have a lot of these parallel EVM and like all of these other narratives that really have no teeth that are following, which I agree are vaporware, but they're usually catalyzed by something that's productive infra. And so people just need to create narratives around catch-up trades. And so if the byproduct of this is like, you know, annoying kind of vaporware catch-up trades, but you're still having some productivity that catalyzes it initially, I think that's more productive than the, you know, the meme side. And so,
I strongly agree. I just think like the narrative, the idea, and it also depends how you define these narrative trades. Because like the internet was a narrative trade for like a decade, right? Like the valuations didn't make sense for for like the multiples, the revenue multiples. And any new technology is going to be a narrative trade where like the price is going to get ahead of fundamentals. Like in fact, if it's trading like an appropriate multiple, it's probably a very boring business with no growth, right? That's just sort of how it works. And like in crypto, of course, everything is gonna of course everything is gonna be mostly a narrative trade, right? Like most of this stuff is the cash flows are far out in the future if this thing works. And I don't know, for me, the meme thing is really like an admission that yeah, none of this stuff will ever have value, right? You're kind of like
I don't agree.
throwing
Nah,
away.
I
I
wouldn't
mean,
go that
At least the
far.
Murad thesis, is basically that. The Murad thesis is utility tokens were just meme coins, right? It's just that their meme was complicated to understand, whereas the meme coin meme is simple to understand. So a lot more people are going to ape that. And to me, that's just like not true. I mean, I respect Murad a lot, obviously, but that to me, that's just not the case. Like, I think a lot of this stuff is going to be incredibly valuable and wouldn't be in the space if I thought that it was all just memes.
Yeah.
And that,
I think I think he's just being hyperbolic for the sake of getting attention, and it contributes to it. And I think he's he's knowingly doing this, right? I don't think he 100% believes what he's saying. I think he's it's intentional. It's marketing. I like and respect Murad a bunch. But even going back to the argument around it being productive for incentivizing good builders, I think that even falls apart, because I would say meme coins are a disincentive. They like good builders are just like, wait, they just launched
what the
this
hell?
shit and then it pumped whatever and they made how much, and I'm going to be here building for 2 years to get just shit on Twitter for like, you know what I mean? I think
and then get sued by the
it's a
SEC.
negative catalyst for I think meme coins, just like, where am I going to spend my time? I can try taking 100 shots on goal with one of these meme coins and keep kind of iterating, and eventually one will hit and I'll make a bunch of money. Or I can try building, and who knows, the space will shift. I just think it skews like the reward mechanics for builders and skews incentives.
If you create a new good primitive with a good token, not a bunch of shitty unlocks and everything, not a crazy high FTV, this meme coin capital is going to like bid the fuck out of that narrative. And so the meme coin capital, I don't think is like just always going to be in memes. I think it's kind of waiting for something that's like worthy of a bid. And we haven't really had that. Like, it is very hard to bid a lot of these new tokens that are coming out. It's just like, it doesn't really make sense. But I guarantee you, when we get like some new good organic, and most of the good things to bid historically in crypto have been like organic random things that have popped up. Like obviously a lot of the DeFi summer stuff, Telegram bots, right? Those just came out of nowhere. Like there's a lot of kind of examples of that.
the other kind of argument I thought was really good was the Alexander Good one. Just that, like the TAM, and this is like my problem with the Murad sort of narrative too. It's just these things are not cults. Like, they're not religions. Like, religions develop over like hundreds or thousands of years, and like they're not united by a coin going up. They're united like by deep cultural and like spiritual beliefs, and like these things, like the only time where they seem to have that is when the token's going up, right? And then like they'll obviously, when token goes down, that veneer disappears. And to me, like the TAM, like if you're going to tell a good meme is a good story, right? It's just a good narrative. And the meme around something like AI, but even around crypto, around like a permissionless global financial system, is just so much bigger than the meme you can tell about like I don't know, even like Retardio or whatever the meme of the month is. Like, the TAM is just so much bigger. It's so much easier to tell a bullish story about Tau or some AI coin than it is about memes. That I just think memes just aren't thinking big enough. They're like, oh, look at Doge, it traded at like 90 bill in May 21 or whatever. Like that's where these memes will trade at. And it's like the TAM for some of the AI stuff, even some of the cryptos, the pure crypto stuff, is just so much bigger that I think, yeah, a lot of people will end up missing the forest for
I
the
think
trees.
you can argue that both ways, though, because part of what helps memes is there is no fundamental value, so the ceiling is somewhat uncapped there. Whereas for some of this other stuff, eventually fundamentals come into play, and they tend to anchor price a bit. Granted, yeah, I think it'll be hard for memes to surpass previous valuations just because of there's like opposing forces. On one hand, you have like the dilution, right? Now you have multiple 9-figure meme or
You have
10-figure
so
memes,
many.
and then on the other hand, memes are much more consensus, and I think they represent a larger percentage of people's portfolios than they ever have, right? And so those are kind of offsetting. I do think they're really useful to bring in capital into the space, though.
Yeah, that's what I was gonna say. I was just waiting to say that. It's like memes. That the thing that they're good for is they're onboarding people. Like apps like Moonshot and stuff. It's like these are actually onboarding people, and like you can throw some money in it. It's fun, but then you learn what a token is. You learn what a wallet is. You start transacting with this stuff. You're like, oh wow, like there could be a lot more here beyond just the meme coins. And obviously that's making the assumption that you're going to graduate from just like chasing these meme coins to like, appreciating this technology for what it is. But I do think it's bringing a lot more attention around the space. And I think it was Cedrus who shared, like the amount of like broken out by generation, like how many people like or what percent of the generation owns crypto. And I definitely think, as Zoomers and kind of the younger generation spending more time online, getting more comfortable with digital value, like meme coins is a good foray into that. And then, as they understand the technology more, they might graduate beyond them. But I definitely think that's positive for bringing in users to like just get comfortable with the technology in itself in a fun way. Like, but
But every cycle, like people buy some token, like buying tokens brings in users. Like it doesn't have to be meme coins. It could be any.
For sure. But it's like this
The simplicity of it is nice.
yeah,
right?
the simplicity and these
understand.
apps like Moonshot is like that sort of stuff is so cool.
Yeah, on like the Good Alexander post though, I read that and I actually agreed with a lot of stuff he said. He had that chart too that was like Nvidia trading volume versus like GME trading volume and just how much bigger. And I've always kind of thought thought Tau was like, not like a real thing. And I still think it's like just incredibly narrative driven. But every time I update those like sector performances, the we talk about how like everything is basically down, but the crypto AI stuff is always like actually standing out beside memes. And I actually I read that, I started thinking about it more. I actually considered buying like Tau for the first time. Because I actually kind of believe in that like big TAM, and it's like Tau is basically just a meme, but it's AI, right? And so I kind of
But is there like a AI
It
coin
isn't
that's
just a
not a
meme though.
meme?
That's like
Yeah,
super unfair. Like to, I mean,
I agree.
I get
sure,
what you're saying, but like
it's a
there's
meme
literally
relative
loads
to
of
its
comments be like,
valuation. It's a meme relative to
okay,
its valuation. But yeah,
yeah,
I know
but
it's not just a meme. But no, I agree with
yeah,
his point that like you can dream a lot more, right? Like there's a lot more dreaming to be done with
Well,
this like AI uh
Yeah, and
network
then you
and
start
everything.
comping it to kind of private valuations too. If you believe in like the value of crypto and AI, you start comping it to OpenAI's 180 bill and things of that nature. And then there's also just the fact that there aren't too many quality AI coins, which is set to change over the next I'd say like 6 to 12 months. So it'll be interesting to see if how much of its value has been because it's the kind of canonical crypto AI bet that people make right now.
yeah. It's just what has more like product market fit as a meme, like uh, whatever SPX. I guess SPX 6900 does have pretty good product market fit, but I mean like Retardio or like AI. Like replacing all human like cognitive and physical labor. Like what's going to let people get more excited, speculate more? Like I don't know. It's just to me,
yeah,
and crypto has a bunch of memes like that I just think are way more interesting than
because
aping these.
there's a certain amount of people which will never like buy meme coins or take them seriously, whereas like you can kind of probably convince a lot more people on something like Tau, where it's like this is the future of AI, versus like a lot of these meme coins is like everyone at some level, or at least a large part of the capital that could flow into these things knows that like this is just a trade, right? Like I don't know if this cult vision comes true because like the whole thing, like it sounds very convincing, and also a lot of respect for Murad. But like the whole idea is like, okay, we're all gonna get rich off these, and it's all gonna be a cult. But like to actually get rich or like make it, like you need to sell at some point. So that's kind of where it falls apart. It's like, is everyone just gonna like have millions and millions of dollars of unrealized gains and all these meme coins and never touch them to sell? And like who is the eventual bidder for those things, right? Because like I don't think any like super serious funds or people or like large portions of the capital are going to come in and like take really big positions in like something like a Doge or a SHIB and like as a long-term conviction bet, right? It's maybe more to play like the market dynamics. So it's like I don't know who's going to be kind of like the exit liquidity for that cult if these people actually want to realize the whole vision of becoming wealthy. But it definitely is an intriguing narrative, and says a lot about the space and people pissed off with the low float high FDV stuff, which we've talked a ton about, and probably will continue to do well as long as like Doge exists at multi-billion-dollar, like $10 billion market cap, $20 billion market cap, and all these new meme ones like can launch and get to $1 billion or something. Like there's so many meme coins about $1 billion now. Like there's just going to continue to be more of them. But I do think it's good to onboard people.
I think they're different investment buckets, though, right? Like I don't. You're not kind of putting money into Tau and expecting a similar degree of return over the same time period as you are putting into kind of some of these short, these low market cap memes. So I think there's a different bucket. Like it's not. Yeah. I'm not satisfying my meme exposure because Tau also has mimetic value. I think I'm getting my AI exposure through Tau, and I'm happy that it also has mimetic value that drives it, right? So it's not. I don't see them being as the kind of.
Maybe
I think it is the same bucket.
I think there's a certain amount of money that will like people won't just bid.
Yeah,
like a certain amount of people or funds or whatever just aren't going to bid memes.
There's definitely a decision of
I'm
like
more from the retail perspective.
No, but there's definitely a decision of buying like WIF versus Tau, right? Like Tau is like double the circulating cap. Obviously, the FDV is bigger, but like that is a real decision. Like, am I going to buy like WIF or Bonk or Pepe, or am I going to buy Tau? Right?
Do you think for a fund that's a real decision?
No,
like
not for a fund.
Serious capital.
No, a fund.
Like, that's going to drive these things.
And that's why. Listen, you get like the Grayscale. Grayscale has like some AI fund, and they just increase their Tau exposure from like 2 to 26% or something.
Yeah, 30.
So like. Again, I'm talking myself into Tau.
I have a Tau bag. Yeah. Speaking of fundamentals,
I might own Tau when this airs.
do we want to chat about the off the grid launch? I feel like that was one of the biggest.
One thing on crypto AI, we're doing like a 3-week. We're doing a huge like 3-week crypto AI thing starting next week. Tons of panels, tons of different crypto AI. Protocols and everything, some investors. This is a 3-week thing. We're gonna have stuff coming out every day. We're gonna have we have an analyst on Delphi pondering Durian, who is writing a 4-part series on crypto AI. Tower in the Square is already free. He's done like infrastructure, middleware, and application soon, and these are all going to be unlocked too. So yeah, we got like a ton coming out on this whole sector. That's just going to be like available starting next week.
Yeah, we think crypto AI is, or at least a lot of us think crypto AI is one of the most exciting, if the most exciting sector in crypto right now. So we're dedicating a whole month to it. It's going to be some really spicy debates too. Like I think we've already had a really good Tau debate actually with a very well-spoken Tau bear, and then there's a lot of Tau bulls to choose from, but I think we chose a good one. Then we're having is crypto AI vaporware debate with Kyle Salmani, not exactly taking the bear case because they're bullish crypto AI, but at least like bearish on a couple of the sectors that people have been excited about. And then Imad Mostaq, the founder of Stability AI, on the other side. And then pretty much all the best builders from Ritual, from all the top sort of crypto AI projects are going to be there in different panels and stuff. So it's going to be a really good month. Tune in. Yeah. So speaking of fundamentals, I wanted to touch on the off the grid launch. Obviously, that went live this week. It's a big investment for us at Delphi Ventures. Obviously, full disclosure, but it's pretty much the crypto game that we've been the most excited about that we've ever seen in terms of like AAA quality, something that we think could really bring in a mainstream audience. I think it's the most likely game to bring in 100 million users into crypto. And so far, the launch has been really good. It was obviously 5 years in the making. They raised over 100 mil. Went live on Tuesday. Had some of the biggest streamers in the world, Ninja, Dr. Disrespect, a bunch of others, streaming it for hours. Obviously, some of this was paid, but most of them were staying for hours past what they were paid for, and a bunch of streamers that weren't paid, like Dr. Disrespect and others, were also streaming this publicly. There's a lot of really strong feedback. I think people were really enjoying the gameplay. There was, I think, 450,000 new wallets created on Avalanche over the last few days, and obviously they launched on a Tuesday to give time to like bug fix and stuff leading up to the weekend, which is the time where you're gonna have the most people online. Over the last few days, it was more streamed than games like Warzone, and the target is to make it the most streamed game on Twitch over the next 2 weeks. There was 350,000 hex decodings, and like a bunch of just I think people were all over the world. You were getting games in less than a minute. So there was a lot of activity. Curious if any of you guys took a look at it and what you thought.
Yeah, I put a decent amount of hours in actually. It's a lot of fun. I think one of the unique elements is just obviously the firefights are really high quality, good variety of guns. The terrain is really interactive, and I think so. The biggest thing, and kind of one of my initial gripes with battle royales, is kind of the ratio of time spent moving around and looking for weapons relative to firefights, which then makes firefights that you lose just more frustrating. I spent most of my FPS days playing like Halo and Modern Warfare, where it's two teams and high action constantly. There's a full map of players, and so what they've done a really good job of is making mobility a really important part of the game. And so you're able to traverse the map very quickly with various gear. There's kind of different elements of the map that, like ropes that help you get to the top of a building. And so you're able to bounce around a map really easily, and which helps you, one, find users if you want to get into a firefight, but also makes trying to get out of one a lot of fun too. And I think adds a whole new dimension to the game in terms of just like,
and the limb stuff is crazy.
The skill of mobility. Yeah.
Did you play with the limbs much? Because I know Ninja was just getting wrecked because he didn't know how to use it.
It's hard. I need to just I haven't done the top down look of every single limb to figure out what's what. But yeah, the idea is you're a cyborg, and you have your torso and your arms and legs are removable, and they provide different skills and abilities, from jetpacks to shields to grappling hooks and kind of everything else in between, which adds a whole a level of kind of dynamism to the game, and creates so many permutations for firefights where you never really have a lot of kind of repetitive interactions, and also provides a lot of really cool counters to what people are doing.
Yeah, it definitely feels like it's increasing the skill cap, because the big battle royales that came out initially were or like Warzone. Wait, what were the other ones? What was the big one before Warzone?
A Fortnite.
There's one before. Yeah, PUBG and Warzone. Like PUBG especially was like, why I feel like Fortnite was such a good upgrade is because PUBG lowered the skill cap so much, in the sense where like you could just get screwed by the zone, and then you're running across an open field and you just get shot in the head, and you just spent like the whole game like looting up and doing that, and then you just like had a bad pull on the zone and you're just screwed. And then Fortnite like upped the skill cap in a way with building, where it's like you could create shelter wherever you were. That building significantly increased the skill cap, but it also like for casual players could be a lot. Like if you face someone who's like a sweaty builder, like you're just screwed.
Yeah, dude, these kids are ridiculous.
They just sound like they're typing on a keyboard.
Yeah. And I feel like Apex Legends did like a good job with the mobility, but I think this is even like kind of an enhancement of that, where you have this additional mobility, so it adds like a skill cap to the game, or like it raises the skill ceiling on the game, where it's like if you get put in a bad position, you can still get yourself out of it. And then with the limbs as well, it's a whole new element. So I think it's a pretty fun game. I haven't played it yet, but I watched like a lot of Twitch streams, like a few hours when it came out.
Yeah,
like it looks pretty sick. I need to get my computer set up.
I'm getting a PS5 actually just to play it. But yeah, I think also the on-chain stuff seems to be working pretty seamlessly. Like their AVAX subnet, yeah, I think they minted like 350,000 hex decodings yesterday. So like loot that's extracted from the game, then minted on chain. And I think if it plays out, like they've spent so much effort on that it could also become like the winning sort of infra play, right? There's like a history in gaming of this being the case where the successful games end up also like building the infra that they need and then like commercializing that as its own thing, right? Like Fortnite with the Epic Game Launcher, Counter-Strike and Steam. We saw that to some extent in crypto with Axie and then Ronin, right? Like attracting a bunch of games because you get access to the Axie player base. I think if this is as successful as it could be, I do think like there's going to be a lot of people wanting to launch games on the Gunzilla subnet.
Yeah. Let's see. Like it's competing right now on like Twitch and stuff, and obviously there's a lot of hype around it. But the game looks and is just as fun, and it's getting just as many viewers as like Warzone, Apex, any of those other battle royales. Obviously, this is like the initial hype, but it's pretty exciting to see a crypto game of this quality with like the real gamers and like those level of streamers play, and have a good time. So it's exciting for the space.
I mean, this is big for Avalanche, I guess, too. I haven't really heard Avalanche a lot recently, right? So this seems to be a pretty big flagship thing for them.
I just checked the chart. Avalanche isn't really up, but it would be cool if like how much value really accrues to the subnet? Do we know or not really?
To the subnet?
Or like through the subnet to Avalanche?
I wouldn't assume an insane amount because it still ends up being a function of volume of transactions, which the game itself doesn't necessarily operate on chain fully. It's kind of the claiming of items, and so yeah, that happens to a decent amount. But I think ultimately most of the value will come from secondary market volume on these assets, right? If you think about, there's like tens of billions of volume that CS:GO did, and so that's really where a lot of these games will kind of capture a bunch of value, which is great because it's directly correlated with the kind of on-chain the volume of the assets, which is a function of kind of excitement around the game and what people want to do. And so and it's also not really related to any kind of pay to win type of dynamic, right? It's skins that are cosmetic and rare and just based on kind of what you've achieved rather than how much money you've put in necessarily.
All right, guys, I think this was a good one. Covered a lot of ground. Let's end it there. Thanks everyone for tuning in, and we'll see you again in 2 weeks.
Yep. Once again, crypto AI starting next week, 3 weeks.
All right, say bye because we've got complaints
Bye.
about our.
Right.
Thanks. See ya
Later.